Hey guys, welcome to episode 19 of the Fire Fun Friday series. Can you believe we've been doing these weekly updates for so long now? It's been almost 5 months since we started this channel. Thank you for joining us every week to hang out. I hope you've been enjoying these updates. Today is an exciting one. One of my awesome subscribers opened my eyes to a new strategy and I've been testing it out all week. Let's go check it out. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. So last week I started incorporating my options trades into these weekly updates because the options trades are part of my income portfolio strategy. If I can make $20,000 a year from options and $20,000 a year from dividends, then my portfolio will be complete. The whole goal of the portfolio is to generate $40,000 of annual income for me to retire early and live off of. It doesn't matter how that job gets done. One of our subscribers told me about an advanced options strategy last Friday, and I spent the whole weekend researching and crunching the numbers. The strategy is called credit spreads. It basically allows me to sell contracts with a fraction of the collateral requirements of my regular cash secured puts and covered call strategy. I actually think this strategy is much riskier. With my cash secured put strategy, at least I will get 100 shares of the stock. With this new strategy, I can lose my entire collateral. I'm not going to dive too much into the specifics because this is not a tutorial video. Basically, this strategy opens up a whole new world of possibilities for me. I will keep practicing and eventually I can bring the strategy to all of you so it can change your lives too. So earlier this week, I was so excited for Monday because I sold my first credit spread. I sold 2 contracts against QQQ Monday morning for a total premium of $40 with a collateral cost of only $400. To illustrate how crazy that is for me, with my cash secured put strategy, I might make $100 a premium, but it would have a capital requirement of almost $40,000. With the credit spread strategy, I can make up to a 10% return on capital with very little collateral. With my regular strategy, I might be able to make a 0.25% return on capital. This strategy destroys the barrier of entry for pretty much everyone. Only have a $500 account? No problem. You can learn how to make 10% returns with just that. This strategy can change the lives of so many people. Anyways, I closed the trade the next day when the contract decayed to $6, so my total profit for that trade was $34. The beginning of this week, I was excited for the strategy, but then the fear started setting in. I can leverage my money much more because I can afford to sell multiple contracts, but the reality of losing all my collateral was setting in. I sacrificed a lot of profit by choosing very safe, high probability trades, but even then, I am deathly scared of losing my money. I wasn't afraid of having to buy 100 shares because even then I would still have the money. This is something I'm working on, but it keeps me from pulling the trigger on bigger trades for much more money. My trading profile is very risk averse, so it will take some time for me to get comfortable with this strategy. I still use my cash secured put strategy for sure though. Since I don't go too heavy on the credit spreads, I still have a lot of collateral just sitting. That's why on Tuesday, I sold a cash secured put on QQQ and sold a 5 contract credit spread on QQQ as well. I was too scared to put in more contracts for the credit spread, so I used the rest of the capital on that second put. The cash secured put got me $13 in premium, while the credit spread got me $90 in premium. The following day, on Wednesday the 17th, I saw Nvidia had a juicy premium on a contract that expired in 3 days, so I hopped in with a cash secured put. But I completely forgot they had earnings that day. One of my biggest trading rules is to never trade into earnings, but it completely slipped my mind, and I was scared. The stock dropped heavily that day. I knew it would be okay because Nvidia is doing incredible as a company, and it was a cash secured put, so worst case, I get to own 100 shares of Nvidia. But I panicked anyways and rolled the contract out 2 weeks at a lower strike. The day ends and Nvidia announces their great earnings. The stock jumps $20 a share and I'm safe. I woke up the next morning and saw Nvidia jumped another $20 a share and my contract had lost over 80% of its value. I was not going to hold the contract for 2 weeks until expiration, so I just closed it out and took my net profit of $241. I was lucky that this trade worked out. Shortly after that, I closed out my trades on QQQ that opened on Tuesday. I learned that day that there was very low liquidity once the contracts decayed this much in a spread, and was having some trouble getting the orders filled. I had to pay more than I wanted to in order to close the trade out, so those two QQQ trades from Tuesday earned me a total of $87 in profit. Everywhere I read about credit spreads, set to close out my trades at 50% profit or a certain time into the trade. Although most people do not do this short-term daily credit spreads, they did warn me to keep an eye on liquidity so I can get out, so I will adjust my trading plan accordingly. On late Thursday, before market close, I decided to sell one cash secured put on Nvidia that would expire the next day, and a small credit spread on QQQ just to test out what would happen if I hold until expiration, so that I can experience it firsthand. QQQ is trading at over $400 a share, and I chose a trade that would pretty much guarantee to expire worthless the next day as well. I am going to hold both of these until expiration and collect the whole premium. So for this week, I earned a rolling net profit of $412. Not bad at all. That's a full-time McDonald's weekly income. If I can generate $400 a week, that's over $1,500 a month of passive income. So that is my goal for this month. I'm already at over $900 in profit for the month, so I'll aim for $1,500, and if I can get over $1,000, I will be happy. If you guys remembered my last month's passive income report, I am trying to generate a consistent $1,000 a month from my passive income sources. I already will generate close to, if not more than $200 of dividend income this month, so I'm sure I will meet that goal. With trading, the sky's the limit when it comes to earning potential. Let's hope I get control over my fear and aim for the moon. The more money I earn, the more I can give back and share with others. Cheers to the future. Alright, let's move on to my stock purchases for this week. I started off the week with 20 shares of Chimera Investment Corporation. The stock dipped quite a bit this week into the low $16 range, so I stocked up. The 20 shares brings the total in the portfolio up to 80 and increases our annual dividend income by $28.25. After that, I picked up the usual 4 shares of SPYG. The 4 shares I picked up brings the total in the portfolio up to 63 and increases our annual dividend income by $1.99. I have some regrets this week with NUSI. The stock dipped heavily and I only bought 2 shares. I've been very slow with NUSI lately since it's trading near all-time highs. This stock is to offer downside protection in case the market takes a dive and offers slightly lower dividends yields because of that. It's more expensive than RYLD and QYLD for less dividend, so that's why I've been buying it less than the other 2. The 2 shares I bought brings the total in the portfolio up to 80 and brings in $4.24 of annual dividend income. Below that, we have RYLD. I started buying RYLD again because I got QYLD to over 100 shares last week. I went big with a 15 share purchase, which brings the total in the portfolio up to 120 and generating $43.55 of annual dividend income. And lastly, I picked up 4 shares of QYLD, bringing the total in the portfolio up to 104. The 4 shares generates an extra $10.85 of annual dividend income. So this week I spent a total of $1,133 on stock. As my options trading starts picking up, I want to start investing $1,500 a week into these dividend stocks. I reinvest everything back into the portfolio to help it snowball faster, and I have cash ready for the tax bill in a few months anyways, so I don't need to use any of this money. The purchases increased our annual dividend income by a nice $88.48, bringing our annual dividend income to $2,630.48. That's a 3.48% growth over last week, and brings us one step closer to our goal of $12,000 per year of annual dividend income. So that's it for another Fire Fun Friday. Let me know in the comments below how your week in the markets went, or if you reached any of your investing milestones. If you enjoyed the video, please consider hitting that like and subscribe button to join me on this journey to financial independence. Thanks again, and I'll see you guys on the next one.